Hello traders, this is Igor from FX Igor YouTube channel, and today we'll talk about ATR indicator in trading. So what does ATR stand for? ATR means average true range, and it's an indicator widely used in technical analysis and financial market analysis. So the first thing that we need to think about is what ATR or average true range indicator measure. ATR measures volatility in the market, how much an asset moves on average during a given time frame. And Mr. Wilder has introduced ATR in his book, New Concept in Technical Trading Systems, a lot of years ago, and still from then, we have in all kind of markets, either the stock market, commodity market, forex market, we have this indicator. So on your chart, whatever platform do you use, you can find, usually in oscillator section, you can find this ATR indicator, and you can use this indicator for trading. Of course, the next thing that people ask about ATR, but how I can use this indicator. So to use the ATR indicator, you need first to add an indicator on the daily chart. For the start, put on the daily chart. Why? I will explain further. So read the ATR value from the indicator oscillator on the chart. And then, for example, if the volatility value, for example, euro dollar, okay, as 0.0090. That means there are 90 pips distance between daily high and daily low by average. Actually, for example, if we have ATR 14, then I will for every single day find the distance between low and high, and then find the average volatility, average distance from the low and high for that 14 days. And I will put that value on the indicator. Very simple. So why we use ATR indicator? We're using ATR to define the target and stop loss. So for the beginning, for beginner traders, just to understand, right now on the screen you have an ATR 14 days indicator on daily chart. As you can see in the right down corner, there is a number 0.00225. That means that this asset has around 225 average to true range in the last 14 days. And it's a huge volatility. So every single day you have more than 200 pips up and down, and so on and so on. But let me analyze further here. We have ATR sometimes wider and sometimes it's a narrow. And this is very important thing. If ATR is wider, and the stop loss and the target will be wider on your system. If ATR is narrow, stop loss and target will be narrow in your system. And it's a very, very important thing, because it's not the same. You cannot put 25 pips, for example. You're a scalper, for example, and your stop loss is 25 pips and target 25 pips. Of course, scalpers for somebody is 1, 2, 3, 5 pips target, but for long-term traders, a scalping is when you trade quarter of the daily average true range. And for example, it's an average true range at 100 pips. For, I know a lot of longer-term traders, for them, scalping is when you scalp 25 pips per day as a target. So sorry for this expression. I know that a lot of forex traders have different opinion about scalping. My friends are long-term traders and I use this term in that way. So for example, you have 100 pips average daily true range, and your your average stop loss is around 25 pips and your average target 25 pips. But after 2 months, you have an average daily true range 200 pips. Of course, your stop loss and target will not be 25 pips anymore. They will be 50 pips. And it's a very, very important to use average daily true range as expression, as a measure of your stop loss and target. You will see on our website, you have a link below this video, you can see on our website that we always use daily average true range as a measure. So when I want to tell you, for example, I want to put stop loss 50 pips. No, I will not say 50 pips. I will say put a half daily average true range as a stop loss and a half daily average true range as a target. Because if 100 pips, it will be 50 pips. If it's 200 pips, it will be 100 pips. So this is the way how we think. Of course, this is another image very, very similar to last one, just to see the market. The same thing is here. If ATR is wider, and stop loss and target will be wider. If ATR is narrow, stop loss and target will be narrow. And you on ATR can see volatility. And ATR, it's not a magic indicator, but it's an indicator that can help you to as every single indicator, other indicator, to help you to remove the noise from the data, from the lot of price levels, just to see how market is volatile right now and where we are right now. You know, when I open MetaTrader platform or some other platform that we use and just look on chart and put ATR and see 50 pips daily average range, I know it's a very boring market. And because of that, I don't like maybe to trade, because this movements are so slow and everything is boring. I don't have enough volatility, liquidity and everything. I don't want to trade right now. It's a boring market. And please use ATR just as a signal for a boring market. The other thing is that I want just to tell you in this video, except that you can use ATR to tell you it's a boring or it's an interesting market, or ATR to use to define stop loss and target and create a systems that your stop loss and target will be measured by daily average true range. The another thing that I want to tell you is to use ATR to think about, is it opportunity or not? Look this. Right now, on this chart, you can see euro-dollar in March 2020. And you can see increased volatility, crazy volatility in the March 2020. And I wrote on this chart, volatility in this example is not opportunity. This is volatility risks for trading because of COVID-19. So, because of COVID, we have right now on this chart just a proof that market start to be a little bit crazy. And this is the very, very important lesson, because always use a average true range as an indicator with combination with fundamental analysis. Always ask, is this indicator not only technical indicator? You need to make a question, and that question need to be, why market is like this? If you see high volatility, okay, it's a high volatility. Why? Oh, there is important news. Okay, important news. Okay, good thing. Okay, news are very, very good. We have a high volatility. I want to buy. Okay, this is the reason. But sometimes you can see high volatility because of some problem in the market. I will just give you one example. I was trading US dollar, Japanese yen. Everything was excellent. In one moment, huge volatility, crazy spikes. Everything is crazy. And I see that a lot of people buy. I don't know why. I don't want to trade. I'm going to see the news. And I see it's an earthquake in Japan. Huge earthquake. I just say, everybody stop, trade US dollar, Japanese yen. Stop. Why? It's not opportunity. It's an earthquake. And we have a data when we have an earthquake in the market. The price will go up, but will go down and up and down and up. It will be crazy. It will be similar as an earthquake. The chart will be similar as an earthquake chart. And you cannot predict that. It's very similar to 9/11. It was a bombing in US, and in that moment, if you analyze the charts, you will see up and down, up and down. It's not just down and just up. It was a crazy, something unstable, something that you cannot predict. Of course, sometimes, like on this chart, you can see, for example, huge volatility increase. It was euro dollar, and in that moment, there were very good news. So it was a very good news for US dollar. And because of that, we had a strong trend, downtrend for euro dollar. So have an excellent fundamental analysis and impact for excellent news for US dollar. You see on the chart that euro dollar went down. You have increased volatility because everybody starts trading. Market is very, very volatile, and we have a lot of spikes. Somebody trades, somebody buying, somebody sell. There is a lot of earnings and crazy stuff, but we have a strong movement because of news. Have a strong movement because excellent news for US dollar, and because of that, you can sell here, and there's no problem because you have some kind of impact. You have something, some kind of proof, a trigger, additional trigger. As you know, in all these videos when I want to create a trade, I always have several triggers. Some fundamental news need to be on my side. Even I trade sometimes, maybe swing trades from 2 or 5 days. I like to have a fundamental analysis on my side. Or just the proof that there will be no important news in the next 2 or 5 days that can change the trend. Sometimes information that there will be no information is meta information that I can use. Of course, on the other side, you need to have a technical analysis on your side. You need to see the proof on the chart. And if you have a proof, if you have a fundamental analysis on your side, have several triggers, if you have some important price level that is broken, and so you can use that. But the point of this video is, whenever you use MACD or relative strength index, or you use fundamental analysis and everything, I want to add one more indicator here. It is an average true range indicator. And for the end, I have a special gift for you. If you want to use average true range and to use as a trailing stop, instead to put a fixed stop, you can use average true range trailing stop indicator you can use for MetaTrader platform. You can download for free. So you have a link below, and below you can download the average true range trailing stop indicator. It's working as usually as any other, but it's very important to you to know that you can use a little bit upgrade, smarter version, and you can download for free on our website. You have a link there below, and I hope that you enjoyed this video. So thank you a lot for your time, and I wish you a great day. Bye-bye.